and I'll just mute myself. But yeah, Charles, take it away.
Thank you, Winnie. Thank you, Winnie. Good morning, everyone. My name is Charles. I'm with the dYdX Foundation, and welcome to the March 2026 Analyst Call. For those of you which are joining us for the first time, the dYdX Foundation organizes those calls once a month to give an update about the protocol, give an update about the ecosystem of dYdX, give some kind of double clicking on some of the partners and friends of dYdX as well, so that token holders, investors, and the community of dYdX can really get a full sense of what's happening within the ecosystem. So we'll start with a table of content in order for you to really capture what we will be covering during this call. We'll start with some market backdrop. We'll also double click on macro drivers. As you know, the markets are definitely dependent on the macro news. We will also give you an update and an overview of the dYdX protocol metrics. We do that every month, so you can measure the progress, you can measure the key metrics happening around dYdX, the protocol. This week, we are very excited to welcome Rauan from the TradingView team. TradingView is an integration partner with dYdX, and we will talk about the tools most used by traders. We'll talk about the market, obviously, so I look forward to this conversation. And we'll review as well some of the recent strategic initiative happening within the dYdX ecosystem. So let's get started. Thanks again for joining. So as you know, the market is very much into a stress kind of positions right now. It remains very much under pressure, and we are definitely not out of the bear market, so to say. So we have got some news. It's extremely volatile. Bitcoin trading is between 67,000 to 73,000 range. It has recovered from the early February capitulation at 60K, but we are still below 45% from the October 2025 all-time high, which was 126K, if you remember those golden days. So as of March 23rd, Bitcoin stands at about 60,000 US dollar, and very much stands within a high level of volatility. A second asset which is also extremely popular within the dYdX traders community is obviously Ethereum, which has been between 2100 to 2300 roughly, and it's still 52% below its 52 weeks high. Same for Solana, ranging between $88 to $94. So very much a market which is in a stage and a phase of fear and greed. And if we look at this index, it remains very much within this kind of red zone, which try to measure and understand what is the sentiment of the market participants. So for more than 46 days, consecutive days, the fear and extreme fear index has been recorded. This is the longest sustained streak since 2022 when FTX collapsed. So definitely a market in the red, not only on the graph, but as well as within the traders' mindsets. And where is this kind of sentiment coming from? Is definitely from the macro. We've got some fairly good news. We will touch on them later on, but at this moment we've got this kind of mismatch between how much the industry is progressing in terms of regulation, in terms of adoptions, in terms of multiple integrations coming and more participants coming on the market, but the macro is weighting heavily on the market itself. So the Fed decided to hold rates steady between 3.5 to 3.75 on March 18, and this is a second consecutive hold. So the median projection now has been changing since all this macro news and the Iran war going on. If you remember, a few months ago, the market was kind of signaling 2 cuts within 2026. This kind of projections have now switched to possibly one cut in 2026 and one cut in 2027. But this is very much an evolving topic, and nothing is firm, obviously. It's just how the market and the futures market are kind of predicting the kind of guidance and steering from the central banks. The Iran war is dominant within the macro news. It's extremely volatile. I suppose you're following this as much as we are, and it's kind of moving every 24 hours, and there is a lot of news within a cycle of 24 days, which brings sometimes the market definitely a bit crazy and definitely risk off. The price of oil has spiked, obviously, which is very much complicating the inflation pictures and pushing back the rate cut expectations. The risk assets broadly are under pressure. The S&P 500 did fairly well yesterday, but overall the trend is definitely in the red. Same for the Nasdaq as well. In terms of crypto ETF and ETPs, the inflows are accelerating despite the risk of macro. Should it be for Bitcoin, for Ethereum, and some others, the flow are not stagnant, which is interesting to watch. And we have also the launch a few weeks back, which will be effective in a few weeks from BlackRock, which is launching its stacked Ethereum ETF, which will be called ETB. So ETA for just the Ethereum physical, and ETB for the stake Ethereum. So that's an interesting evolution of the product range of this giant of wealth management that is BlackRock. On the regulatory side, you probably seen also on the news, the media and social media, that the SEC and the CFTC issued a landmark joint interpretations on crypto asset classification. So essentially, they established 5 parts of token taxonomy, including the digital commodities, digital collectibles, digital tools, stable coins, and digital securities, obviously. So only the digital securities remain subject to the securities law. And it also gives clarity on 18 major cryptocurrencies, such as Bitcoin, of course, Ethereum, Solana, XRP, which are expressly treated as non-securities, which is something which has made some progress over the past years, but is definitely an additional statement now that it's coming from joint regulators in the US market, which is definitely welcome, and it's kind of giving further clarity to people still wondering how this is happening. From the dYdX perspective, this is an important step forward. Essentially, the proof of stake protocol, staking, and airdrops are classified as non-security transactions. So this removes a major source of regulatory ambiguity around the staking model for dYdX, under which dYdX currently operates. So a lot of progress on the regulations, a lot of things which should be giving kind of joy to the market, to be honest. But I think, as I mentioned earlier, the macro weight is still very heavy. We go to the next slide, please. On the regulatory and TradFi conversion, the CFTC chairman Selling also confirmed that the US perpetual futures framework is coming within weeks. That's very important. It's very much also close to everything we're building at dYdX. So essentially, Selling stated that the CFTC will enable true perpetual futures, not long-dated contracts, on regulated US exchange, and it will be targeting a rollout within the next 30 days. So this directly validates the perpetual contract model that DEX's venues like dYdX have operated since inception. It's also a very strong signal and positive signal from the regulators. So the US is now building towards the dYdX native product structure, and it's very encouraging as well, and it's showing that everything we are building for years now is definitely adopted in the more traditional finance way of things, which is a positive for dYdX and the dYdX community. The CFTC also announced a safe harbor for DeFi software developers under the Project Crypto joint initiative with the SEC. So this is essentially a guidance on when DeFi software providers must register versus when they operate a non-custodial interface. The CFTC issued a non-action relief to Phantom, the Phantom wallet, for acting as a non-custodial interface connecting users to registered derivative platforms. Selling as well signals that rulemaking on prediction market and AI-driven trading systems will be also in the work and coming in the near future. So it's again very good news for the wallet providers. The wallets are essentially a key component of the distribution for any DeFi products, including dYdX. So getting clarity on that front is also very strong. And when it comes from the US, I think it also brings essentially kind of a momentum for other parts of the world to align or get very close to this kind of view of the market, view of the technology. By giving clarity in the US, we can hope that many countries will follow suit. And the last part is on prediction market and AI. I think it's definitely topics which are very close to any crypto traders. We are all working with those new tools. We are all thinking about their potential and having regulators which are early stage within those new technology trends and market trends, taking opinions and working on bringing clarity can only help for an exponential growth of this new subset of the crypto market. So dYdX is essentially built for this environment. When you see the SEC as well as the CFTC joining forces and interpreting the market in a way that removes decades of ambiguity around the core infrastructure of dYdX, it's a very, very strong signal, and it's a very positive signal as well. The proof of stake staking, classified as non-security transaction, is now also operating within a clearly defined regulatory lane, which also brings further clarity around the dYdX model, where we have this proof of stake chain, as well as the overall market, where there is this crypto primitive such as liquid token, for example, or staking activities. The CFTC is working on perpetual futures onshoring framework, and this is being built exactly around the product structure of dYdX, the product structure that dYdX users already use. So it's also a good sign for us that things are moving in the right direction, and showing also that the works of dYdX and some others in the perp deck space is inspiring and essentially getting more adoption. We start to see more and more TradFi aspiration for 24/7 always-on trading. CME has announced that 24/7 crypto derivative will be launched in May. And this is also definitely a baseline for dYdX since inception. So it's good to see that other major players on the market are joining us in that side of the innovation. We look now at the market. We look now at the March protocol overview for the dYdX protocol. So as we do every month, we try to give you some update on how the key numbers of the protocol are evolving. So obviously the lifetime volume keep growing. The unit of accounts here is $1 trillion, so $1.57 trillion of lifetime volume recorded on dYdX. This is a major number, definitely positioning us within the top tier of the decentralized perps venues. $65 million of protocol fees have been distributed to stakers since inception as well. This is illustrating this proof of stake and the utility of the dYdX token. 194 markets are listed if you follow the governance of dYdX, you will see that new markets are being introduced on a regular basis, as well as from time to time, some markets which are not active anymore or not active enough will be removed via governance. So this is a snapshot for March 2026, where we record 194 listed markets. So a very wide choice of essentially assets for users of the protocol to express their opinion. Should it be on crypto native asset? Should it be on RWA? Should it be on commodities or on FX? I really invite you to visit and revisit the kind of spectrum of markets available on dYdX and seeing before your eyes how this essentially reflects the dynamism of the DeFi industry and how much new markets and how much opinions you can express. Should it be on gold, Bitcoin, or some real world asset being tokenized? We are getting closer and closer by the month to the 100K celebrations of dYdX token holders. We register as per March 2026 98,000 dYdX token holders. So welcome to the community, to the newcomers. $49 million of staking reward have been distributed to the stakers. So that's really one way you can also participate within the dYdX community and the dYdX ecosystem is by essentially staking your dYdX token and getting rewarded in USDC for that. 33,000 dYdX token holders have decided to stake. So welcome again to those active participants in the ecosystem. The volume for February, March are definitely in line with the market, but the market is not in the best shape and the best dynamic. So the 30 days dYdX volume average for February was about $5 billion. It's a further compression from January and December, and it's also consistent with the market-wide deleveraging, which is intensifying right now. So daily volume remain muted through most of February, as fear and greed index is also hitting single-digit readings. So as we touched on earlier in this conversation, the market are in the red, the sentiment are also in the red. So it's not helping any venues, should they be centralized or decentralized, in growing their kind of level of activity. Same for the open interest, which is definitely compressed. So this crypto volume contractions in volume is not only dYdX specific, but definitely illustrating the broader risk of environment, which we can see in exactly similar shapes, should it be a centralized or decentralized exchange. The most traded market on dYdX remain crypto asset. What is interesting to see is how the market is evolving and how the market is kind of repositioning. There is often, depending where we are on the cycle of the market, of the crypto cycles, we think about rotating away from Bitcoin. We think about Bitcoin dominance within the trading volume. And there is a signal here. It's hard to say if it's going to be sustainable. I let every one of you kind of interpreting those numbers, but it's interesting to see that over 1 month, Bitcoin was representing about 73% of the trading volume on dYdX, and now it's representing 65%. And essentially, we've seen some of the major alts, such as Ethereum and Solana, getting an additional kind of market shares within our marketplace, and showing that there is definitely space and there is attention and there is opinion around those majors, such as Ethereum and Solana. Is it the stablecoin? Is it the activity on trading, or the level of innovations on those chains? It's definitely something we will follow closely, but a trend to keep an eye on. Possibly some early sign of a rotation, or at least a rebalancing of the market between the dominance of Bitcoin and some of the majors. Active stakers, we talked about this a few minutes ago. More than 33,000 active stakers as per March 2021. Sorry, as per March 21 of 2026, excuse me. So it's definitely something which remains extremely stable, and it suggests a maturing and low turnover holder base. So very grateful for everyone's support here. Now is this part of the conversation where we welcome one guest, one partner of the dYdX ecosystem. Rauan Khassan, very good morning. Welcome to the dYdX analyst call. You're with TradingView. Maybe I will give you a few minutes to introduce yourself if you want to.
Thanks, Charles. I'm really excited to join you at the start of another volatile week, and thank you for providing the insightful breakdown on the markets. Honestly, it's sort of confusing to me to see how negative the sentiment is. You've rightly mentioned that the performance is similar to the FTX, but the current performance and the state of market participants is nowhere close to, let's say, Luna Crash that we experienced about 4 years ago. So, good point to stake, I guess, and just to briefly reflect on yesterday's market activity. It always adds fuel to conversation to see the direct correlation between commodities, say gold and silver assets, to the crypto on Trump news release. So I would consider this as a cautious optimistic step. As for myself, again, very excited to join this conversation. I will promise not to make it a monologue. I've been lucky to join TradingView early, over 10 years ago now, while the platform has been online since not full 13 years. And for the most of my tenure here, I've been responsible for developing international markets as opposed to the core US market, which had provided us a lot of leeway, i.e. we've been early to recognize crypto. I guess our first crypto data feed has appeared online in 2013. We've seen through and survived through the first publicly recognized crypto boom of 2017 and 18, and basically seen, I guess, 3 generations of crypto projects. Survived NFTs as well. Developed India and Middle East before it got pinpointed on the map. So now I'm in the chief growth position, thinking about how we can streamline and enable partnerships around the ecosystem that we've built, including crypto, but not only limited to crypto. We've been focusing a lot about going multi-asset, and I think that's one of the directions that crypto exchanges and protocols are going to, i.e. Adjusting into the various asset classes. So yeah, happy to address any of your questions, and any feedback is always appreciated.
Thank you so much, Rauan. As a reminder for the people which are not familiar with TradingView, you record close to 100 million views per month on your platform, and you're essentially connecting more than 70 different exchanges. So it gives the listeners a sense of the scale of your business, and also the connectivity of your business within the crypto and non-crypto space, as you mentioned earlier. And maybe I'll start with one first question, Rauan, if that's okay. Given the size of your user base, as I mentioned, more than 100 million views per month, which products are generating the most new interest right now? And are you seeing a meaningful demand around tokenized equity, as well as perps of securities perps or prediction market? What are the kind of areas of your business which are encountering the fastest growth right now?
Overall, traditional stocks and futures market remain the most significant, provides the most significant input to the platform breakdown. It can be often overlooked because, let's say, stock community is much more quiet as compared to the crypto adopters. But crypto with the overall activity always sits in between 35 to 40% of user activity range on the platform. As for the recent trends, I would not be insightful here. The past 12 months have definitely been all around commodities. So it's started early last year with the gold. We've seen quite a few exchanges trying to jump on this train and enable their users to trade on the commodities. Some of them done it in a very clumsy way by introducing CFD trading, basically diluting their platform setup with very accounts, which has not been a very forward-looking step. Now we are seeing a more systemic approach when the perps and futures are applied. And just recently, this November, our internal review suggested that total user number looking at XAUT, i.e. tether-backed gold symbols, have crossed 1 million. But at the same time, to give you the sense of the overall impact, our CFD symbols are seen between 4 and 5 million unique users. So crypto-backed commodity symbols are still at below 20% capacity of what they can potentially achieve. And we definitely recognize the opportunity here, because there is quite a few active retail traders who would be willing to engage in the gold. And I did not even touch the oil market, which had boomed in the past 3 weeks. I'm actually very much looking forward to seeing this stats coming and seeing what's been the spike in total numbers. But here, I think that's the challenge for, let's say, the overall crypto community, as compared to the traditional markets such as futures exchanges, and even compared to their older generation CFD partners. They've got quite a few homework to do, right? So oil has spiked. Have we got oil perpetuals available? Let's say if we take top 10 exchanges, actually not. Some of the platforms have been the first. You mentioned on the slide prediction market, so obviously it's poly market. That's how they spiked 2 times in Q1. Hyperliquid reacted very fast. But we also need to understand that we've got this deformed view on the market. We should not expect that the regular retail user would be readily available to swiftly switch to poly market or hyperliquid once the instruments are done. We are thinking about 80% of the audience who are patiently waiting for their exchange to introduce that, and I'm actually keen to see how how long go to market for the oil perps would do for the crypto.
Thank you for that, Rauan. We'll move on to the next question, which is more related to actually the way you look at the 24/7, the way you look at on how these centralized versus decentralized exchanges are getting integrated within your platform. And what I'm curious to know, and you're spending so much time with all these builders, should they be in fintech, in crypto, or in TradFi, or at the cross path of all of this? How do you see those platforms being essentially expanding their business, and what can you teach to the crypto builders and the crypto community in general and DeFi? What are we still what did we not yet learn enough from these centralized venues, which you are seeing in terms of integrations or product itself?
So few aspects here. 24/7 trading approach, centralized versus decentralized, and the takeaways based on the prior integrations done, right? The first one would be very quick. As I mentioned, we've started less than 13 years ago, and we've built the entire product, the entire platform around the current technology standards. So basically from day one, back in 2013, TradingView has been supporting 24/7 trading once we've introduced the first crypto feed. I wonder what has it been? Has it been an empty box at that time? So 24/7 capacity has always been embedded within TradingView. We are basically waiting for the partners to pick it up. Let's say, is CME moving to 24-hour continuous futures trading? We are supporting that. Are they going to introduce 24/7 futures around crypto derivatives? We are ready to support that. So the technical capacity here is on standby. Funny, not funny, but just a relevant observation. I think last time TradingView has been down has been pre-COVID. I think it's been either 2017, and at that time we've invested heavily. I would even say over-invested in the infrastructure so that we've got the leeway. And I think that's one of the beautiful things around the platform is that we are never going down, and there is this especially popular in the crypto community joke that once the market gets volatile and your exchange crash and you cannot execute, the last thing that you can do is just stop in TradingView and watch your portfolio burn. On the other aspect, centralized versus decentralized, I can talk at length here. It's one of my favorite topics, which I unfortunately provide not the response that I would want to. In my personal understanding, I had expected decentralized protocols to really shine and pick up from as compared to the centralized exchanges back in the second half of 2022. Luna crash, followed by FTX demolition. I truly believe that at that moment, the, let's say, systemic inefficiencies of centralized exchanges and their vulnerabilities will be highlighted. And by that time, DeFi protocol has been perfectly available, including dYdX. So we had expected this to pick up, and unfortunately we had not seen much of the adoption from the regular retail users. We've been trying to gauge the understanding why had it happened, and my best assumption is it all comes down to the simplicity, i.e., us being full-time involved in the industry, understand that setting up the DEX trading is not that challenging. You just need to open a wallet, connect a wallet, and then you are set up to trade. Easy? So the actual response is no. We are always overlooking this simple guy who would always be going to the simplest onboarding, simple solution possible. And these two additional steps, well, you first need to identify the wallet, and then you need to connect the wallet to the platform. That's the adoption challenge that DEX has managed to take. But I'm personally very pro DEX, so I would be happy to see it developed on the platform further, and I guess we'll have some time to discuss about the related planning for the following period later in the talk.
Excellent. Rauan, thank you so much for that. The next question I would like to kind of double click on with you. It's actually on the next page. It's more about this this integration of. Sorry, yeah. What I wanted to double click on, Rauan, is on this dYdX by TradingView integration. Can you walk us through a little bit how this integration brings value to the users of TradingView as well as to the users of dYdX, and what does it mean from a trader experience?
Sure. So, as I've mentioned, we've recognized the opportunity working with dYdX about 4 years ago. At that time, dYdX has been perhaps the largest DEX protocol on the market. So it's always challenging to get attention from popular protocols. So I appreciate getting integrated across the venues. So one opportunity is leveraging the charting technology within the dYdX platform itself, and the other one is direct data feed integration of dYdX on TradingView. So the missing element here is exactly the wallet connection and the opportunity to execute directly on the platform, which should be seen as the natural next step in this integration development.
Excellent. Thank you so much for that. We'll go on the next slide, please. And there is something else I would love to double click on again with you, Rauan. When it comes to the perps and the decentralized venues, there is already close to 14% of the global futures volume which is happening on decentralized venues. And then we start to see newcomers such as obviously the legacy providers of trading venue for perps, the centralized exchanges. We see dYdX, we see Hyperliquid on the decentralized part of the perps market. And now we start to see the CME and the more TradFi venues. How do you handle in terms of charting and in terms of price feed, the difference we will see from time to time from those different venues?
I would not describe this as a challenge necessarily. We've consistently applied the aggregated approach, i.e., we are never looking into becoming an execution partner. We are trying to support as much data references, being it stocks and futures exchanges or crypto exchanges, centralized and decentralized. And we rather see it as an opportunity, especially once we move from discussing easy user journeys to more complex and professional user journeys, because that's eventually the core of our ecosystem. Those users who actually take their time, set up the platform, and leverage all of its capacity available, right, including the scripting language. As it goes to the multiple feed connection, I think one of the best opportunities here that we provide is the arbitrage. Obviously, since the market have become much more price efficient as compared to, let's say, pre-COVID time, the arbitrage opportunity on crypto markets is very much limited. But I still remember this golden times, as you mentioned in the beginning of the call, when back in 2018, traders could move Bitcoin between the wallets, trade it on the let's say US or European exchanges and Brazilian exchanges, and have a manual arbitrage margin of 8-10% on each of the cycle. So obviously this price efficiency has gone, but similar to how we provide multiple data points for oil, we see that there is an opportunity for traders, let's say, regardless of their stage of this journey, to let's say leverage and compare the data references so that they can make the more informed decision.
Rauan, I'd like to finish with one very important question. What should TradingView's user expect from you guys in 2026? What kind of new features are you working on? What is exciting in your eyes on the roadmap of TradingView for 2026?
We are working a lot to complete in complex option strategy builders. That's more relevant to the traditional markets, but I believe that with the direction we are having on both prediction markets, traditional venues such as CME Group adopting crypto derivatives, we would see that in the midterm, i.e. 18 to 36 months, we would actually see crypto options to become more actively used and actively engaged. But let me use this last call just to mention to the users and community listening that one of the most significant, if not one most significant element of decision making and planning within TradingView is the user's feedback. So one of the reasons why we had not proceeded with completing the loop and introducing the DEX trading until 2026 is very simple. We had received just very few inquiries coming from end users, which we are used to trusting. And actually, this can be not the lack of interest, because I trust the numbers. I trust that certain percent of trading volume is generated via DEX. I see the opportunity that they are more forward-looking in new instrument introduction. They are more agile with that. It's definitely an opportunity. But let me ask the listeners, especially those who are actively engaged in the DEX trading, to please take a moment and leave that piece of feedback, because you cannot underestimate how direct feedback actually influence and impact the planning within our platform.
Absolutely. So please share feedback to TradingViews as much as you're sharing feedback to dYdX. Everyone's inputs are just helping the product teams, the engineering, the front-end builders to keep improving your experience. Rauan, I'd like to thank you very much for joining us this morning. It was very insightful conversation, and I'm also super excited to introduce further as a TradingView by dYdX integration. So please enjoy these partnerships and the results of these partnerships as a dYdX and TradingView user. It's just a very elegant integration between two leaders in the market. We'll move on to strategic.
Thank you, Charles.
We'll move on to the strategic initiative reviews. Winnie, take it away.
Yeah, so strategic initiatives for March include Surge Season 12. So as many of you know, Surge is a governance-approved program. Initially, it was supposed to go on for 9 months, but I think between December and January, it was extended by an additional 6 months. So Season 12 is part of that extension. And so, yeah, for the month of March, beginning March 1st to the 31st, you're gonna have zero maker and taker fees on BTC and bonk markets. There is also a campaign called the March Bonkness Trading League with up to $50,000 in dYdX prize pool. And so the top 20 traders based on P&L will share in that prize pool pro rata. First place will get 15K, second place will get 7.5 thousand, third will get 5K, fourth and fifth will get 2.5K, sixth to 10th, will get 2K, and 11th to 20th will share $1,000 each. And in addition to this, there's also the $1 million, up to $1 million liquidation rebate that continues, but only for non-BTC markets. And I should also mention that for the Bonkness Trading League, this one is for non-API traders only. And then the second one is a 200K affiliate booster program. So affiliates have been a really awesome way to drive volume and just trading activity on dYdX. So this is one of the initiatives that we had. Today's the 23rd, so I believe it's over now. But between February 18th to March 18th, there was a milestone-based program where affiliates could earn escalating USDC payouts from $250 up to $12,000 at $100 million worth of volume that they referred. And the minimum eligibility was 5 new referred users. But as I mentioned, this is a program that's completed. This is just giving an update on some of the programs that we're running. There will be Surge Season 13 coming up next month, and other programs. We're always running a bunch of different programs just to keep the community excited and participating organically within the dYdX ecosystem. But yeah, no, Charles, that is all on my side, unless you have anything else to add.
Thank you everyone for joining. You will be able to meet some of the dYdX Foundation members at EFCC Cannes next week. If you are attending, please reach out and come and say hi. Thanks again for joining this March 26 dYdX Analyst Call, and we look forward to sync up with you next month. Thank you.
Thank you. Okay, ended stream. Now, Rauan has dropped off.